Hello, my name is Rachel and welcome back to my channel. In today's video, I'll be sharing with you some information on Fundsmith Equity. Fundsmith Equity is the most popular actively managed fund here in the UK with assets of over £27.9 billion. 5-year annualised returns for Fundsmith Equity are over 18%. This fund has performed incredibly well since its inception, and it has led some people to be calling Terry Smith Britain's Warren Buffett. They do share some quite similar philosophies, which I'll be going through with you in today's video. I'll also be sharing some of Terry Smith's investing secrets, and then also telling you why he has only just made the decision to invest in Amazon. So as always, I think transparency is really important in these videos. So I wanted to let you know that I was invested in Fundsmith Equity in my investment ISA. I was invested in this fund a few years ago. It was actually one of the very first investments I made in my investment ISA. And then recently in the last year, we renovated our house. So I sold my Fundsmith Equity investments to basically fund the renovations, and I haven't bought back into it just yet anyway. So it might be something that I might look to invest in the future, but at the moment I don't hold any Fundsmith Equity in my investment ISA. I chose to make other investing decisions for now. So as I said, the 5-year annualised returns for this fund are over 18%, and had you invested £1,000 into this fund back in 2011, 10 years later now, it would be worth £5,753, and that is compared to a value of £3,623, which was achieved by the Global Large Cap Growth Equity Index. So as you can see, Terry Smith has produced market-beating returns. So what are the keys to investing success for Terry Smith? So the first one is that he will always read all the accounts and annual reports in great detail. And this is very similar to Warren Buffett's philosophy with investing. So Smith believes that the problem with a lot of investors, both professional and amateur investors, is that they are not reading the numbers, they are not reading the accounts and looking at them in enough detail. He says, if you think that people are reading the accounts, you would need to explain to me how things like Wirecard and Patisserie Valerie happened. And he says this referring to two once popular stocks which went into administration in recent years after accounting frauds. Smith believes that all of the information you need can be found in the numbers. He says, if something's a good company, it'll be there in the numbers. Part of the strength of Fundsmith Equity's investment process is that they keep things nice and simple. Buy good companies, don't overpay, do nothing is their philosophy. Now, reading this really reminded me of a Warren Buffett quote, which is, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So there is a lot of attention being paid here to buying a company at a good price and then sticking with it. So in an article I was reading in the Investors Chronicle, Terry Smith goes on to talk about the kind of stocks that he thinks will be successful at the moment. And I thought it was interesting because I own quite a few of these kind of stocks myself. The one kind of stock that I don't own myself is pet stocks. So in this article, he said, almost anything to do with pets is good. So he understands that obviously in the last few years, pets have really become part of the family. So I suppose he might be thinking about stocks like Pets at Home and that kind of stock. At the moment, I'm not invested in any pet stocks, but potentially it might be something I invest in the future. And then the other areas that he said could be good for looking at if you want to invest in individual stocks and shares are companies that have done very well since things changed in 2020. So examples of this would be e-commerce, payment processing, various forms of telemedicine, and companies that facilitate remote working. So as I said, I have a few of these kind of individual stocks and shares myself. So I have, for example, Shopify, which has done very well, which is obviously an e-commerce company. I also have Adyen, which is a payment processing company, PayPal, companies like that. I do tend to hold quite a lot of. I think it's important to say in this part of the video that I do prefer to invest in funds, trusts and ETFs, and I only invest small amounts of my money into individual stocks and shares because, to be honest, for me, I would rather leave stock picking to the experts or invest in an index fund or ETF where I'm simply tracking the market. And then the last point that I wanted to make in this video, because I thought it was really, really interesting, is that Terry Smith has only just invested in Amazon. So he only bought the Amazon stock back in the summer, which obviously Amazon has been doing very, very well in the stock market for years. So in the last 5 years alone, Amazon stock price has gone up over 365%. But for Terry Smith, he only just wanted to invest in it now, so I thought it'd be interesting to include his reasoning as to why. So Terry Smith says that he was previously put off by the low profitability of Amazon's retail businesses. However, he felt persuaded to invest in the stock because the return on capital has grown significantly from under 5% in 2015 to 27% in 2020, which he says is clearly a significant improvement. So that is why Terry Smith has only just decided to invest in Amazon. I think Fundsmith Equity is a really interesting fund. Obviously, those returns have been consistently good since this fund's inception, so it might be an investment that you want to go away and do a little bit more research on and decide if you want to make this investment for yourself or whether it's something you want to leave. I personally am going to go away and look into it a little bit more and see whether it is something that I want to add to my portfolio or whether I just want to stick with the investments that I currently have. Anyway, thank you so much for taking the time to watch, and I hope you have a really lovely day. Bye bye.